Hello, everybody. Welcome to the Minds of Money 5 at 5 show this week. This week we're sponsored by four mining companies, Shali Group, Golden Rim Resources, Theta Gold Mines, Polymetals Resources, and we're brought to you in association with the Resource Global Network. I'm Simon from Minds of Money. I look after the Western Australian market and the Far East. The 5 at 5, normally 5 guests at 5 p.m, started back in April, and it was intended to fill a gap whilst people were on lockdown, etc. But it's proven to be very popular. It's been a great feeder for our online events. And this is now episode 103. So yeah, please have your videos switched on if possible. We're really keen to encourage questions. There's a chat function at the bottom of your screen, and you can actually write your questions there. You can also raise a hand virtually and write your question, and I'll come to you at the end of each presentation if you want to ask a question live. There'll be some polling questions that we're going to put to you. So yeah, enjoy the show. We have an African themed 5 at 5 today, which is focused on companies with projects in Africa. So the speakers that we've got today are Alan Marlow, Technical Director of the Shali Group, Craig MacKay, Managing Director of Golden Rim Resources, Mitford Mundell, CEO of Theta Gold Mines, and Alex Hanley, the CEO of Polymetals Resources. We also have 2 investor guests today to talk about some of the issues that are going on in mining around the world, as well as specifically in Africa. We have Daniel Porter, the Portfolio Manager for Resources for Pure Asset Management, and we have Jeremy Atkinson, Director of North Shore Capital. So a warm welcome to our panel, a warm welcome to you all, and let's have our first polling question, please. This question is, what percentage of your mining portfolio is allocated to African projects? And that's, you know, if you're an investor, if you're a mining company, or if you're a, associated company, how much of your time, percentage-wise, do you spend looking at the African market, just to try and get an understanding of that? So whilst we're doing that, I'd just like to have a chat about African mining in general. So I'm just going to start by asking a question to Daniel, if I may. Daniel, your investor sentiment towards African mining projects, has it increased, decreased, remained similar? What's it like, and how has it changed over the recent years?
Yeah, I think the Australian market as a whole has a fairly, at times, fairly apprehensive view towards Africa. I worked for a number of years in London, and certainly the UK and European market has a very different perspective, and one where there is an acknowledgement of risk and operational risk, but that risk is priced. And I think, I quite like that way of looking at Africa, and I think sometimes the Australian market is a little bit hesitant because it's based on superannuation money, right? It's pension money, whereas European, UK markets and North American markets tend to be a bit more entrepreneurial driven. So from our perspective in the fund, we are more than happy to take a look at African projects, but again, it comes down to the right project and the right location. And doing our homework. We will do a lot of DD. We do a lot of DD for our investments regardless. But I think Africa takes on a little bit more. But we are looking at a couple of projects in Africa at the moment, one in Botswana and one in Tanzania. So yeah, happy to watch the space and happy to have a look, and always big fans of gold at Pure Asset Management as well.
That's brilliant. That's great to hear. And I'm sure that when we hear from the mining companies today, there'll be interesting projects in Africa that you may well wish to take a look at.
Absolutely.
Jeremy, sorry, the same question to you about your sort of sentiment towards Africa over at North Shore Capital.
Right. So First of all, the question on the weighting. So the weighting for us has stayed about the same at about 5% of the portfolio, but the approach has definitely tightened in a number of aspects over the years, and particularly in terms of a focus on, and this picks up some of the things Daniel was saying, a focus on jurisdiction, the nature of the projects, the stage of the projects, and also the quality of the management. So just picking up those things sort of individually. I mean, jurisdiction, it really matters, and every jurisdiction is different. I know George W. Bush sort of tarred Africa as a country, but, you know, we are looking at, you know, 50 odd different jurisdictions here. So the jurisdiction is important, but it does change, and it changes over time, and it can change very quickly. So Tanzania would be a good example of a jurisdiction that has kind of come and gone and come back again. So you have some fairly stable jurisdictions over time, like Namibia and Botswana, which continually score highly, but others that come and go a bit. Tanzania is a bit of a comer at the moment, I think, for me. For me, the projects need to be advanced enough so we got some economics to look at them. They need to have the qualities of grade, short payback, low capital cost. So gold is a preferred area to be involved in, simply because of the risk of holding projects over time. And obviously the management is really key, and if the management have done it before. So you look at projects, for example, we're invested in at the moment, things like West African Resources has also bled over into an investment in Theta, largely because Theta's got the same guys building the project as built the West African project. They know what they're doing. So the one positive for investors, however, is projects do fly under the radar in Africa far longer than they do in Australia or anywhere else. So you've got plenty of time to do your due diligence. And I think Daniel referred to that, and that's a very important thing to be doing. So that'd be my view.
Fantastic, thank you. And you talked a lot about jurisdictions there, actually. I mean, the mining companies we've got today, that we do have people from Namibia, from South Africa, but also from Burkina Faso, from Guinea as well. Just coming back to you, Daniel, on the jurisdiction question, are there any that you particularly like? Are there any that you particularly steer clear of? What's your view on that?
Yeah, look, we'll have a look at projects in most jurisdictions. We don't, you know, apart from the deep dark depths of the DRC, we'll probably count that one out. But otherwise, it does, as Jeremy said, it comes down a lot to the nature of the project, and you know, size and grade is obviously an important aspect, but the people behind it is, you know, very, very important, I think, for us. You know, resources projects anywhere, look, you can come up with strategies A, B, C, D, E, and F, and you'll probably have issues with all of them. That's the nature of mining. If you've got a good management team, you can steer through those. You know, it doesn't matter where you are in terms of jurisdictions, you're going to have an issue that comes up in resources projects. But better management teams drive good projects fundamentally. So that combination, I think, is what we look for. You know, and good people surrounding good management teams as well. You know, good geologists, good metallurgists, people who really know what they're doing, and people who have a track record as well. You know, people might be very bright and very good at their jobs, but if they haven't done it before, it's hard to convince investors of a track record that doesn't exist. So for us, we'll have a look at everything. We may not be able to invest in places like Sierra Leone or things like that at the moment, but certainly we'll have a look at everything. It won't stop us from turning the page and doing a bit of DD.
Superb. So all about the management teams, pre-existing experience in the region, knowing what they're doing, proven track record. That gets you through the risk elements of the continent as such, or some of those countries within.
That's right.
That's great. I've lost the polling results, but I think from the people that answered, thanks, Elaine, 40% are saying that 10 to 25% of their portfolios are in Africa. So thank you for that. I'm going to move on to our first speaker. This is Alan Marlow from the Shali Group. Alan is their technical director. They're a privately listed company, and they're exploring for copper and rare earths in Namibia. Now, we were having a few problems with Alan's camera, so we can't see him at the moment, but I believe he will be sharing a presentation and we will be able to hear him. So welcome, Alan, over to you.
Thank you very much, Simon. Appreciate that. Yes, the Shali Group are a private Namibian registered company, and we have been exploring for light rare earth enriched carbonatites in southern Namibia for over 10 years now. And also we've been exploring for copper on the mattress belt with the gold and silver credits. Recently sold our, or 85% of our asset in the Ongombo and Ongiama deposits to the London Stock Exchange listed African Pioneer, headed up by Colin Bird, who expects to be mining that Ongombo deposit within the next year or two. That has enabled that sale has enabled us to forge ahead with our exploration of the carbonatite complexes in southern Namibia, with our focus on the Twyfels-Kupji carbonatite complex, and from now on I'll call that the complex. So I have to reiterate Twyfels-Kupji anymore. It's an incredible deposit with a number of excellent attributes. 1K diameter in exposure, sits within the Spurgebiet National Park. It shouldn't be a problem as long as we stick to all of the environmental recommendations provided by the Ministry of the Environment in Namibia. The park is subdivided into areas of restricted sensitive areas and other areas which are withdrawn, and there are 2 licenses which contain the Twyfels-Kupji complex and the Kaisahoe carbonatite complex are situated in areas outside of the withdrawn areas, and we're happy going along with what is required of us to obtain our EIA for the start of drilling. If we move to the next slide, please, we'll have a view of the complex from 2 different directions. We'll have a geological plan on the top left-hand corner, which shows the distribution of a central core in red and pink, and a peripheral cone of cone sheets in yellow, brown, and so on. And this, if we look to the bottom right, we'll see the structure of this thing, basically shallow dipping cone sheets dipping in towards a central core of calciocarbonatite. The peripheral cone sheets are magnesiocarbonatites with an average grade of 2.5 REO. The central core has an average grade of 4.5 total rare earth oxides, and a average neodymium plus praseodymium oxide grade of just over 1%. So in terms of various light rare earth enriched carbonatites being developed worldwide, we have exceptionally good grades. Style of mineralization can be seminated, banded, sheared, or folded, as in those photographs. And if we move to the next slide, please, we should see on the next 295 whole rock analyses of this carbonatite done by ALS in Vancouver. And if we look at the distribution of the calcium, magnesium, and iron within the carbonatite, we see a fairly standard fractionation line between rare earth enriched calciocarbonatites in the central core through to more magnesio carbonatites with higher MgO, CO ratios. If we look at the silica content, we see a hydrothermal alteration trend towards higher silica samples. if we look at the rare earth grade distribution curve, we see that no samples report less than 1% TR total rare earth oxide. 50% of the samples report over 2% rare earth oxide. We've got some good grades. We're going to start off in, if we could have the next slide, where we'd like to think we've got phase one open pit startup, which should be capable of a fairly short payback. Here we're just looking at the chemistry of the rare earth phases, principally fluorocarbonates, calcium-rich sinchasite, and calcium poor parasite. A mixing line between those. The reason we've gone into detail with regard to the mineralogy is because this will provide the metallurgical engineers that we hand over to with a very good understanding of what the mineralogy is. And on the left, the mineral map, and above a backscattered electron image showing distribution of the fluorocarbonates, which essentially form bundles, sometimes in contact with barite within the calcio or magnesio carbonate matrix. A few years ago, when we talked to metallurgists regarding the mineralogy, they advised that this was a rather difficult process to look at. More recently, discussions have been totally, and the metallurgists are very confident this we will be submitting samples to our process engineers in Perth in the next few weeks, with having some initial results ready for Mines and Money in early April.
Brilliant, Alan. Thank you. It was a little bit broken, some of that, unfortunately, but I think we got the gist of it. And I'm presuming that presentation is available, or we can make it available afterwards, or it's available on your website. But thank you very much indeed for that. I think I'm going to just go back now to Jeremy and get some thoughts, impressions, and or a question, please.
Yeah, I was just wondering, Alan, just on the capital side, what sort of capital cost do you think it's going to take to get a project of this nature into production? And you mentioned the mineralogy. I mean, obviously, rare earth projects suffer from difficult mineralogy generally. So, what sort of timescale are we talking about to get something up and running? And is that going to be separation in Namibia, or producing a concentrate to be processed overseas? What's the idea there?
I think the idea would be to try and develop a flow sheet within the next 6 months, and within that 6-month time frame, get a 1 to 2 ton bulk sample of the central high-grade core calciocarbonatite to IMO in Perth. And they're saying that this is a fairly similar setup to Songwe in Malawi, which they have experience of, and also fairly similar to Peak Resources in Ngwa deposit in Tanzania, which they're also familiar with. They've got experience of over 10 rare earth element projects. So I think they're a good place for us to go to utilise their skill sets. And I think this is, based on what they're saying, this initial open pit, starter pit, could be within 18 to 24 months.
What sort of capital are we talking about here?
Yeah, that I wouldn't know, but again, it's not a difficult thing to try and get the data from Peak Resources and from Mckay, who've done to date an excellent job in bringing their projects to a more advanced position than we are. So we will utilise their numbers as best we can to get a feel for these things. Yeah.
Thank you. Thanks, guys. Thanks, Alan. And yeah, looking forward to meeting you in London in May and seeing how you've progressed. So good luck with that. Next up, we have Craig Makai, Managing Director of Golden Rim Resources. They're an ASX-listed company with the ticker GMR and are exploring and developing for gold, copper, zinc, silver, and lead projects in Guinea, Burkina Faso, and Chile. Please feel free to use the comment section to ask any questions if they arise. But I'm now going to hand over and welcome Craig Makai from Golden Rim.
Yeah, thanks, Simon. It was a bit of a mouthful, the projects you mentioned. So we really are just focused on one project. It's a gold project in Guinea called Carter. And we do have other assets, but essentially we're looking to move some of those along. So we're looking at potential divestment of those. So if we go to Carter, bit of a location map. So we're in the heart of the Sigiri Basin in Eastern Guinea. Carter is an advanced project. It was an ex-Newmont project when we got into the project last year, just over 12 months ago. We already had 39 kilometres of previous drilling, diamond RC, aircore. And look, I think the location tells the picture here. We've got 300 square k's of licenses. If you look at that little figure there on the right-hand side, the key is that line, north-south line, that runs through our licenses in the middle of the basin. It's a major structure. If you run along that structure, there's a private group, Sigiri Gold, with 1 to 2 million ounces, about 10 k's to the north. But then you go 35 k's to the north, same structure. You've got Anglo Gold Ashanti, the Sigiri mine complex, around 13 million ounces now of gold endowment, more than 20 years of operation. And look, the key point, and we put our maiden resource out for Carter last week. The key point here is that the mineralisation looks identical. So very broad zones of quartz, sulphide, tourmaline stockwork, and very importantly, very deep weathering. So we have a deep saprolite zone, incredibly soft material down to 100, 150 metres below surface. And that's certainly the prize in this project is chasing this soft material. I suppose if you look at the broader basin, I suppose probably the more exciting news in recent times has been a discovery by Predictive Discovery, 80 kilometres southwest of us at Bankan, 3.6 million ounces. But certainly this is a part of the world where we're going to see a lot more activity moving forward. A lot of companies are getting active, a lot of work being done. I think a lot more discoveries and interest moving forward. So if we go to our project, last week we put out our maiden resource, pretty good effort in 12 months. So we've put out 25.5 million tonnes at 1.1 grams for 930,000 ounces of gold. I think the key part of this is the bulk of that resource is oxide transitional gold. So nearly 700,000 ounces at 1.2 grams, just over 72% is this material that's from surface, incredibly broad. We're talking about a zone 600 metres wide. You can see a little picky there on the right-hand side. So that's our resource sitting in a 1900 pit shell. So a kilometre long, as I mentioned, 600 metres wide, open at depth beneath the pit shell and still open along strike. And to put that into context, I mean, we look at some companies like Theta, for example, that are doing great guns in West Africa. Their maiden resource was 700,000 ounces over 2.7 kilometres of strike. And they had 11% of oxide transition. So I think this really stacks up as the start for Carter. And I'm about to talk about the exploration upside, but what is really interesting here is we've actually only drilled 1 kilometre out of 15 kilometres of anomalous gold that we've detected in our auger drilling. So this thing's going to grow, and it's going to grow substantially. And look, I suppose the other is because of this material being so soft, it's essentially free digging from surface. We think down to about 100, 150 metres. It's really broad, so the stripping ratio is going to look good, maybe 1 to 2, 1 to 3. So we are really talking about a low-cost mining exercise here. I mean, essentially an earth-moving exercise. We've got our met test work results back yesterday. Again, very pleasing. So free milling, high gold recoveries, something that can be just treated in a conventional CL processing plant. We don't even need gravity. And you're looking at cyanide leach recoveries of 95, 97% for this beautiful oxide material that we've got. So there's a section through the resource area. So we've got these parallel stack lodes, and they're quite thick. They range from 10 to 20 metres in the sort of eastern part of the pit. In the footwall in the west, they're much broader. So they ranged from sort of 20 up to 50 metres wide. And I think when you look at that cross section, if you look at the yellow line at the bottom, that's the pit shell, particularly in the footwell in this area here. The resource is just limited by the depth of the drilling. So we have hits in the resource like 29 metres at 8.5, 47 metres at 1.9. We're completely open at depth. So by simply just dropping a few holes beneath, we're going to be able to pull them into a larger pit shell. So look, some real potential to increase the resource in that resource area. I suppose we're talking about incremental increases here. But the big story at Carter is where we go outside the resource area. So we've just spent a hell of a lot of effort drilling auger holes beneath laterite cover. So this part of the world has got laterite right across. You're talking 3 to 10 metres thick in thickness. You can't see outcropping rocks. And so you need this drilling technique, auger drilling, to drill a hole beneath the laterite, give you a bedrock sample, and then you use that for your resource targeting. So if you look at that picture in the middle, and this is probably the most important thing in my preso, is that the coloured image beneath is where we've imaged up our auger geochemistry. And the blue is this resource area and where all of our drilling has been to date, pretty well. So we've got 1 million ounces in that little blue box. We've got a corridor now of anomalous geochemistry in bedrock for 15 kilometres. We still have another 7 kilometres in our licence to do the auger drilling. And then we've got all these target areas now to test for oxide gold outside the resource area. So, our view is 1 million ounces is just the start. This thing's going to be a lot bigger, and we're about to get out and test that. If you look at the picture there on the right, that just shows you how it fits in with Anglo Gold Ashanti to the north. So major structure goes for nearly 20 k's probably through our licence area. You follow it along. They've now got 13 million ounces over 11 kilometres in their licence area. So very, very exciting in terms of upside. And then I'll just show you this area up in the north, just one of our target areas we're about to drill. It's about the only area we've got where we can actually see through the laterite. So there's a little window there where the artisanal workers have cut through the laterite, which is about 3 metres thick, exposes stockwork mineralisation identical to what we have in the resource area. We sampled it the other day and we got 170 grams gold. So there you go. There's target number 1 for when we restart the drilling again in a few weeks' time. So, Carter, 1 million ounces now, just to start, and it's going to grow quickly, and it's going to grow quickly this year. That's all I had. Thanks, Simon. Simon, you're on mute.
Sorry, I'm muted. That was very unprofessional on me. I do apologise. So yeah, what I got out of that was low cost recovery, high grade gold. So that sounds very attractive indeed. What did you take out of that, Daniel?
Yeah, it's all looking like a pretty exciting time there, Craig. Can you just talk about the next sort of 12, 18 months, what drilling you need to do and what work you need to do around to getting that into a reserve, and what sort of size of reserves you're looking for, and then time frame to sort of get to a sort of bankable state as well on that project?
Yeah, Daniel, it's a little bit uncertain, I suppose, because we're sort of heading into new terrain as we head along this corridor, and we don't really know what we're going to get. We know we're going to get something, so we don't quite know. I mean, our view, and we've sort of crunched the numbers. I mean, this is a project you could basically develop now on the 1 million ounces of that really soft
resource. Yep.
Yeah. So you'd be talking about a 2 million ounce sort of project, $200 million sort of capex, that sort of thing.
Yep.
It would actually go now, but our view is now, well, let's see what this is. Is it 1 million ounces? Is it 3? Is it more?
Yep.
So look, our intention this year is to drill. We'd like to put out a resource upgrade around the end of the year. Just what meters we'll need to do that, we sort of don't really know yet because we're still testing new areas.
Sure.
We're about to embark on about a 10,000 metre RC campaign to drill those first holes into those new target areas.
Yep.
But look, all goes to plan. Yeah, look, drill this year, another resource upgrade, end of the year, a scoping study early next year.
Yep.
And then I suppose sort of by mid next year into feasibility study and to push it forward. Yeah.
Yeah, gotcha. And cash on hand at the moment to do that drilling over the next sort of 12 months, Craig?
We've got about 3 end of December.
Okay. Yep. Okay. Not a worry. Well, looks like an exciting time there. Well, definitely one to keep an eye on, I think. How are you finding things on the ground in Guinea these days?
Yeah, look, no problem at all. I mean, we sort of haven't missed a beat there. We have a team that are solely based in West Africa. We don't have expats in our team, and that's the way we've operated there for more than a decade. So COVID didn't slow us down, and there was a coup earlier this year in Guinea. Again, no impact on the ground. So no, it's full steam ahead, really. And I mean, in some ways, there's some real advantages. I mean, we sort of get 2-week turnaround with assays and this sort of thing, whereas back here in Australia, it's a couple of months, you know. So it's
2 weeks is quite nice. Yeah. Yeah. Okay, good to hear. Thanks, Craig.
It's really fantastic, Craig. Thank you very much indeed. We're going to have to press on now. And next up, we have Mitford Mundell, who's the CEO of Theta Gold Mines, TGM. I'm going to hand straight over to Mitford.
Thank you, Simon. You see my screen?
Yep.
All right. So normal disclaimer. So just a bit about Theta, ASX listed, market cap at the moment of about just under 80 million Australian dollars. I'm sure many of you would have seen recently in the news, there's been a bid that closed on the 2nd of March for Focus Minerals, an offer made to their shareholders. And really, it's sort of a sideline strategy. Without distracting us from what we're busy with in South Africa. So we acquired now just under 3% of Focus, and we'll continue, with the discussions with their shareholders and expanding it. We believe there's a lot of synergies there for us and for them to also develop their 2 operations in Western Australia. So really, what's the sort of investment case for Theta? We currently have just over 6 million ounces in resource and expanding. We recently released some results that we got from 2 of the mines that's not in the resource. We have more than 40 old mines in this area. This was actually the basis of the first gold rush in South Africa in the 1800s. And for various reasons and wars and all kinds of things and pay limits of 18 grams plus, these mines sort of became forgotten in a way, and we're fortunate to now have them. So in terms of investor value, currently we really still valued as an exploration development company. And as we start to bring these mines into production, starting over the next year and building up over the next 5 years, obviously the investment rating will change quite drastically. So the potential I mentioned, we just sort of started scratching the surface here, and we'll be bringing these other mines into the resource over the next few years as well. Over the next 5 years, in terms of growth, we plan to expand to 160,000 ounces per annum, and start over three phases. The first phase in process now. We're very fortunate to be very low cost. These are adits, multiple adits running into the mountains basically, and very flat lying reefs, pre-developed. So as these old timers were looking for the 18 gram a ton plus areas, they developed many areas that they couldn't mine that we can go back to today, and beautiful ground conditions. So we don't have the big capital requirements of sinking shafts and long pre-development. We can basically go in and start mining tomorrow. Our team, we've gathered a team now that really are a team of asset optimization experts, having developed and optimized many mines. A lot of us, me included, have worked for many years in Harmony Gold, and there's a few tricks that I think we learned in those days there as well. Yes, and then the flexibility. I mentioned the multiple entry points, and so we have a lot of flexibility developing this. And it's, somebody said the other day, somebody very clever, this is like a dog catching a food truck. You don't know where to start. And I think that's been, some of the previous attempts, a little bit of the issues is, people would touch a bit here and touch a bit there. So we're very focused, and now we're going to develop this now, and then expand from there. And then obviously in the area that we're operating, the sort of, the meaningfulness of this project will make a huge difference to our communities there. It's just a picture of the team. We're going to stand on it, but what we have is quite a diverse team. We have a good mix of South African, Australian, and Chinese people on the executive team and on the board, coming with a diverse set of skills. My executive team are fully South African, which I think is actually quite important. You need to have people managing day-to-day aspects of a business, understanding the jurisdiction. So just briefly, where the project sits, it's the northeastern part of South Africa, close to the Kruger National Park, and around the towns of Pilgrim's Rest and Sabi. And if you look at this picture here, over the next 5 years, the plan is to start up 6 of these mines. Now, it shouldn't scare people when they think, oh, well, how are you going to start 6 mines in 5 years? But as I said, these things are pre-developed, and basically just go in, re-equip, and start mining. We've actually started re-equipping Frankfurt mine already, as we did trial mining at the end of last year, to just prove up our long-hole mining method. And it's very cheaply you get in. So the first 3 mines, Beta, Frankfurt, and CDM, has been part of our first phase pre-feasibility study that we released last year. Subsequently to that, we've done a pre-feasibility study on Rietfontein, and we decided to bring Rietfontein also into our definitive study, which will be concluded within the next 4 to 6 weeks. So you can expect some news from that, expanding on some of the throughput numbers, and then obviously bringing Rietfontein expands on the life of the mine. And then we'll be looking at Farlip and Glens Lynenburg after that, into bringing them into phases 2 and 3. Yeah, so 3 phases, first gold in 2023, and then over the next 5 years, building up to the 160,000 ounces. And just some of these numbers, we did our pre-feasibility study on those first 3 mines. without no inferred resources included. This is only a reserve that's been declared on these for about 270,000 ounces. And we did our planning on $1,570 an ounce gold price. As we know where the gold price currently is, so we probably a realistic number is the NPV there above the 1800 mark of 132 million US dollars, 111% IRR, very short payback periods, which from start of mining around 17 months if we look at that gold price. And if you what's included in these numbers, if you look on the left bottom graph there, you'll see the drop down from year 7 into 8. And the only reason for that is because we haven't included any of the inferred resources. So concurrently with mining, as we start mining here, we would be expanding, developing underground and bringing more of those resources into play. So that drop down is a little bit artificial. And on the right bottom, you see the cost. That's quite a big advantage that we have, is the low cost. So irrespective of the gold price, we're not focused on the gold price. The gold price will do what it does. We just need to make ourselves as robust as possible for any gold price. And as we get economies of scale, we'll get well below $800 an ounce cost, which I think is a very big advantage. Thank you very much.
Superb, Mitford, superb. 30 years plus of mine life estimated from your presentation I saw there. Wonderful. We muted some people earlier. So if we can just unmute, I'm going to come to Daniel again, please.
Yep. You're right, Simon. I'm happy to go ahead.
Yeah, no, sorry, but
No,
I should have muted myself. Right, go ahead. Yes, please.
No, that's right. Yeah, wow, what an exciting project. An absolutely monstrous reserve you've got there. What's the sort of capex requirements all in for this project, and how do you see that being staged out? And what do you see as the split of debt and equity too?
So for the first phase, we from the pre-feasibility study, about $36 million pre-capex. Mm-hmm. Overall, about $50 million, which I think for any project like of this kind, and the only reason why it's so cheap is because it is really mostly brownfields. We recently broke down or demolished most of the old plant because one of the problems they had previously here is they tried to basically force a square peg in a round hole. You need to have the right metallurgy to get the gold out. So we've done extensive test work. That's one of the things that's taken us quite some time to get to understand exactly what we need to do. But parts of the plant remain. So the majority of the capex that we require is to rebuild that plant, and then major mining equipment, etc., is really what makes the rest of it. In terms of the sort of debt equity, we probably would be going with something around 50-50. It depends on the appetite on project financing. But because of this very, very low capex, actually, and short payback periods, we probably would be able to look at more of a project finance, bigger portion to project finance.
Yep. And what's your production profile look like over the first sort of 12, 24 months as well, Mitford? How do you see that ramping up? And sorry. I'll ask the second part afterwards. No, go ahead.
So sorry to interrupt you there, Daniel. So the first phase builds up to about 70,000 ounces per annum.
Yep.
Now, as I mentioned, we'll be bringing out the definitive study now, and we're actually planning in there. So, I can't talk about the results before we bring it out, but we probably would build up to higher than 70,000 ounces in phase 1 because we brought Rietfontein in. Rietfontein, incidentally, it's a mine that in the old days produced, they treated about 270,000 tons and recovered about 9 grams a ton. So it's a very high grade mine. Bringing that into a mix will certainly change a few of our numbers. And then it's really the only sort of build up restriction is how fast we conclude all our environmental studies and get approvals. In terms of mining practicality and certainty about what we have in the ground, that's not an issue at all. And we have 130 plus years of information about all these mines. We're just verifying what we already know. So building up over the 3 phases to 160,000 ounces, we'll do it as fast as possible. At the moment, we say it's going to take 5 years.
Yeah. Okay. And that permitting process, sorry, that's a little bit of an issue, is it? Do you think, or is it just a matter of time and getting that through the necessary channels?
You're talking about the approvals, or I missed that?
Yeah, approvals. Yeah, exactly. Yeah.
Yes. No. Look, I mean, so in South Africa, there's a process which is quite a lengthy process. Now we've been at it for quite a while. We have a very, very competent team of experts. And we ensure every phase of the approval process, we submit what needs to be submitted. We now, verified in the last few weeks as we went through public participation and talking to the interested and affected parties, we actually now have a lot of good friends, including the government agencies. They move at their own time, but we've planned their time into our timelines. So we're very positive, and something that is quite unique to what compared to many other mining companies is that our community is actually a shareholder in the South African business. So they put their voice dynamically, with ours in getting these operations off the ground. I mean, there's going to be 1,500 people employed through these projects, and it's in a community that has an 85% unemployment rate. So you can imagine the pressure coming from there. So we are going to start these mines on our timelines. In fact, the president of South Africa said, as a recovery post-COVID, that they want to halve the timelines of approvals for mining approval. So there's certainly, all the sort of ends are coming together that would now bring this into play.
Right. Thank you.
Okay. Thank you. And also, Jeremy, if we could just, because 3 out of the 4 projects are gold, I think this is worth exploring as well. A little bit further.
I just obviously it's an exciting opportunity here, Mitford. I'm interested to understand a bit more about the flow sheet and the. You were talking about the processing a little bit. Are you producing doré or are you producing concentrate?
No, we looked at producing concentrate, and it's still something that we considering, maybe as an early gold option. But in the end, we will have different streams. So it's basically a modular plant, and that's why we will expand it modularly as we bring in different mines. Each mine has different metallurgy.
Some of it refractory, or is it majority of it?
Some of it is, and so we have carbonaceous material. We have we have some sulfide material. So the main process is to have carbon float, take out the carbon. But even before that, we will have DMS. Crushing DMS, we actually take out the fines, we take a lot of the carbon out before the time, and what you feed into the plant then it goes through carbon float, sulfide float, and then there's intense cyanidation
So you've got a regrind circuit on that as well, have you?
Sorry, I missed that.
You've got a regrind circuit in there somewhere, have you? And you're putting it twice through.
Yes, so ultrafine grinding, intense cyanidation. So the test work on that very good. Now that's only a small portion of what putting through. We have most of what we're going to put through, special beta mine, Frankfurt mine, is free milling, easy recovery, very good recovery results that we got from the test work and from what we know what they've done in the past. But we're catering for that, for every portion differently. So we have the optionality in how we treat it.
So what takes you from, I know you talked about the overall sort of capex of the project, but you're obviously, I think you're relatively low on cash at the moment. So what sort of takes you from here to that next stage?
No, we have, we have enough cash still for another 2-3 months at this stage. Conversations currently happening to raise more bridging capital, and we're also looking at some self-generating options in terms of early gold. It's been at times quite a long, difficult journey, I think, for Theta to get here, but I think investors are seeing now that there's real purpose and we're actually doing what we said we're going to do. I mean, a lot of the things that we said a year ago we're going to do, we've announced, we've done the trial mining, we're making progress with our licensing, we delivering the definitive feasibility study now in a month's time. So I think the confidence of investors are building. So it's really more a question of raising cheaper money rather than the expensive money. So we don't want to go too big too soon.
Great stuff, guys. Thank you very much indeed. That was very interesting. Thank you. Last but not least, we need to move on to Alex Hanley, who is the CEO of Polymetals Resources. They are ASX listed. Their ticker is POL, and they're exploring also for gold, but in Guinea. So Alex, over to you.
Yeah, thanks, Simon, and good day, everyone. Polymetals, we've listed on the ASX back in June 2020, so we're relatively new to the public arena. We are exploring in Guinea, just up the road from Craig from Golden Rim, and he's done a great job of giving everyone a good overview of the Sigiri Basin as a whole. So the team that sits with me on the board specifically is David Sproul, who's no stranger to mine building, having built 8 mines in 25 years here in Australia, notably White Dam in South Australia. And joining him from a technical perspective is Dr. Chris Johnson, bringing that real technical oversight to the group. We've got a good team on site, West African-based Sigiri experienced team. And as you can see here on the right-hand side, we're about 35 k's east of Anglo Gold Ashanti's Sigiri gold mine. So, Craig did a great job of talking to the Sigiri Basin as a whole. The regulation maturity is probably one thing to add on there. Since 2011, the code and the mining industry has come leaps and bounds, not only in gold mining, but obviously bauxite, iron ore, and to a lesser extent, uranium. So with that obviously comes infrastructure and a growing economy. And that's what we're seeing on the ground in terms of maturity and becoming a sort of an established and a strategic mining jurisdiction. As you can see down the bottom here, we've got Golden Rim through Craig, we've got TDI, which he's also mentioned, and big players like Hummingbird and Nord Gold as well. So it's becoming increasingly popular jurisdiction to explore and then operate, not in Guinea, not only in Guinea, but also Mali across the border. So we hold 2 licenses, only 8 k's apart from each other, north-south. The most advanced project we've got is Alahine, Alahine, we had completed 2 soil sampling campaigns, an RC program prior to listing, and since listing, we've really honed in on the mineralisation and the information we've gained from the phase 1 drilling program, and what you can see here on the left is essentially in essence a pattern drilling AC program, and what we've sort of identified is a 3.5, 4K sort of zone of mineralisation, much of the similar type of material in which Craig talked about the soft oxide just before the metasediment layer within that 100-metre zone. So we're looking at the same type of modest grade, high volume type operation here in the long term, but before that happens, we've got a lot of work to do in the interim, and this is just one example and one section of those broad widths of near on 1 gram per tonne dirt at depth. We've got about 7 intercepts between sort of 10 and then 19 metres of 1 gram or near 1 gram potential, and this sort of echoes to the Sagiri style type of mineralisation we're seeing. We've got, in terms of Alahine, we've got an auger program that is just completed. That was targeting targets that we had not yet drilled underneath the lateritic cover. The auger obviously has been a very good tool in exploration, both here in Australia and in West Africa. And what we saw was some interesting results from that auger program and follow-up targets generated for future programs. The next step with Alahine is an aeromag survey commencing in the next few weeks, and then from that we'll leap into an RC-AC program targeting a lot of the hits we got at depth in which were terminated during that blade refusal, as well as targeting the open areas of that modest grade, high volume, broad width type mineralisation. To the south, about 8 k's south is our Mansala licence. We took a different approach with Mansala, and instead of doing predominantly gold assays, we did it multi-element, and we're seeing the same type of concurrence of orogenic style pathfinder elements present within our data set, and predominantly in the northeast section. There's some very interesting artisanal working, which we obviously see in a larger extent up at Alahine, but here is coincident with these pathfinder elements. So the focus for the auger program, which is currently underway, it's probably about 14 days in at the moment, making good progress, and we're targeting these pathfinder elements to see if they can give us an indication of what lies beneath, and that'll be a telltale sign from getting underneath the lateritic cover and understanding that bedrock potential. So very exciting. Also happening in Mansala at a different stage than Alahine, but does produce an interesting story nonetheless. So similarly to Alahine, we'll be looking to fly Mansala with the airborne magnetics, which will be conducted in the next few weeks. So big sort of 4 to 6 months coming up, and we're hitting the ground running in Guinea, and the boys are doing a good job of getting everything complete and technically astute. So it's very exciting, Simon.
Thanks very much, Alex. That's very good. Very good neighbours you've got there, I see, along with your friends at Golden Rim as well. So neighbours become good friends, I'm sure. If we could keep the questions, please. I'm going to ask Jeremy and Daniel just to ask one question each, please, as we are overrunning a little already. So yeah, but it'd be great to hear what Jeremy, I'll start with you again, what you've got to ask to Alex.
Yeah, Alex, I had a look at your quarterly briefly before this, and you described that it was good news although there'd been a coup last year, it was rather good news that the Ministry of Mines appears to be sort of one of us, so to speak. Can you just talk to that a little bit?
Yeah, definitely. Mega Suba, who's come in, he's obviously got industry experience, something that is, someone would say probably lacking in a lot of political circles, but he's tried and tested. He understands the jurisdiction and he understands where it can take the Guinea economy. So I think in that regard, Jeremy, the Mines Department have made a good call.
Okay, thank you.
And Alex, just one from me very finally. Can you just talk about the team that you've got behind you as well and the experience there?
Yeah, no worries. So on the board, David Sproul, he's the chairman. He's been with the project since 2019. He initially invested in the company and he's been, I suppose, operating in Australia specifically with small mining operations. As I said, 8 mines over 25 years, and notably White Dam. Joining him is from a technical standpoint, Dr. Chris Johnson. He's worked all over Australia and has been with the project since 2020. On site, Daniel, we've got a very experienced Ghanaian influence. Both Ghanaian geologists actually were instrumental in developing the Tri-K deposit, which lies to our south, which was owned by Avocet and developed by Avocet, now obviously owned by Managem. So we've got the guys on the board and we've got the guys in the field to really deliver.
Yeah, great, excellent, good to hear. Thanks, Alex.
You're on mute, Simon.
You're muted, Simon.
It remains just for me to say thank you very much to everybody, to Alan Marlow from the Shali Group, Craig Makai from Golden Rim Resources, who we'll be seeing at IMARC, Mines of Money at IMARC in October, I believe. Mitford Mundell from Theta Gold Mines, also exhibiting at IMARC, I believe. We look forward to seeing you there. Alex Hanley from Polymetals. Special thanks to our 2 investor guests, Daniel Porter from Pure Asset Management and Jeremy Atkinson from North Shore Capital, and also our partners Resource Global Network. I'm just going to pull up one final slide, if I may, because it's a very, very busy year for us. Elaine, have we got this slide with the events on? No, okay. Not to worry, I can talk through them. So we've got 2, we've got several events coming up, but the ones of note, I think, for Africa are if you're going to IMARC, if you're going to Indaba at all, we've got Mines of Money London Connect in May, which will be the first global mining investment conference this year after the postponement. So if you're interested in coming along to London prior to your trip to Indaba or just in its own right, please do. We've also got an online event the 5th to the 7th of April, which should be very well attended and has booked extremely well. If you need details on that, there's myself or Nick Hughes, who's also on this call, who you can contact if you know Nick. I'm also going to be in Perth next week, and I'd love to get together and pick your brains and have a coffee with you if you've got time. But thank you very much for supporting the 5 at 5. For those of you with mines, good luck with your mines. For those of you investing, good luck with your money, and we'll see you next time.